What is up, everybody? Nate here, and the unemployment/employment and job listings report was released today for the United States, and shocker, we actually have some very good news for once. This report actually showed that the number of job listings is increasing in the United States, and unemployment is pretty much staying exactly the same and has been the same for the past few months. So today I want to talk about this jobs report and the job listings report and go over how all of this is going to affect inflation, because shocker, it does affect inflation. And I also want to talk about how all of it is going to affect our economy in 2022 and beyond. But first, let's go over the numbers. So in June 2022, 372,000 jobs were created by American businesses. So that is a massive increase from what we saw month over month. And the number of jobs listings is currently over 11 million and staying strong in the United States. This is really important in general for our economy because it shows businesses are still able to hire people. There has been this big fear for businesses and investors that inflation is getting out of hand, and with businesses not able to hire people because people are not buying their products, well, then they're going to have to drop a lot of those job listings. They're not going to be able to hire people, which is going to send the unemployment rate all the way back up. But so far, we have not seen that in June 2022. And that could be one of the biggest catalysts for a recession in the future. If we start to see job listings deteriorate, if we start to see businesses hiring a lot fewer people, well, then that means they don't have as much money and they're not expanding as quickly. That means your entire economy is contracting, and at the end of the day, that can send you into a recession. Not as many people are going to be able to spend as much money because they don't have any money because they don't have a job. This was a huge success for Wall Street because Wall Street was only anticipating around 250,000 jobs to be grown, but they actually saw an increase of over 122,000 added to payrolls in the month of June 2022. Healthcare, social assistance, and your professional business industries added the most, with almost 140,000 of the 372K. Next up is transportation and warehousing, which is going to be super important for the future of our economy as we move through a lot of these supply chain issues. Adding more personnel to those industries means that businesses are going to be able to hopefully alleviate a lot of the stress in those supply chains. So that is one of the biggest industries growing for jobs in the United States. Retail and manufacturing jobs also grew a whole lot during the month. That is where a lot of Americans are feeling the stress of these prices right now. Businesses are not able to produce a lot of products because of our supply chain issues, but they are doing their best to try to add employees onto their payroll so they can continue to make more products. But like I said, the fear was they weren't going to have enough money in order to pay all of these employees, their current employees, or hire new ones. But that doesn't seem like it's the case at this point. Overall, with jobs continuing to go up in our economy, that is a really good thing for our country as a whole, because it means that we don't have this big issue of stagflation in our economy right now. A lot of businesses and investors and experts have been warning that stagflation could cause a massive concern for everyday Americans because inflation goes way up, but your economy goes way down. And the reason for that is because Americans have a lot of money in 2021 and in 2022, and will probably continue to have money into next year. They have all of this money, but there's nothing really on the shelves because we have these supply chain issues. So without any money getting spent, well, then our economy essentially tanks. This will help alleviate that though, because businesses now are hiring workers still so they can continue to produce products and stock shelves and manage a lot of their stores. So that is going to help Americans to be able to go out and buy things so they can continue to stimulate the economy. Now, I want to talk about inflation itself because as the United States adds jobs, well, then inflation is naturally going to go up because all of these workers that are getting hired are now getting paid a whole lot more. Year over year, from June 2021 to June 2022, wages actually increased by around 5.1%. So people are making 5% more in 2022 than they did last year. That's a lot faster than Wall Street was expecting, which means that our inflation problems are getting worse in the United States. And as the United States adds more jobs, well, more people are employed. So So there needs to be a lot more money circulating throughout our economy because you now have to pay all of these people. And unemployment at this point in the US is at a record low. We haven't seen unemployment this low since around the 1960s in the United States. Currently, it's at 3.6%, and it's been this way since about April of this year. With employment going up in the United States, that means the job market is really strong. People have a lot of money, so they're going out and spending it. That is a bit of a problem for the Federal Reserve as they continue to fight inflation and try to get aggressive with their interest rates. If people are continuing to stimulate the economy, then they know that demand is pretty elevated in our economy right now, so they have to do everything they can to bring down demand so that way people just can't spend a lot of their money. They don't necessarily want to see really high unemployment, but they do want to see people spend a lot less money, which means they're going to have to make it harder. So how exactly do they do that? Well, over the past few months in 2022, they have been raising their benchmark interest rates, making it harder for people to borrow money, making it harder for financial institutions to get their money. So you have started to see mortgage interest rates go up, auto interest rates go up, and all of this money suddenly stops circulating throughout our economy. They first raised them by 0.25%, up from 0%. Then they raised them by 0.5%. And then just last month, they raised them by 0.75%. The most aggressive the Federal Reserve has been on inflation since 1994. Not only that, but they've also stopped a lot of their money printing. So they're not putting as much money out into the economy because we just don't need it. At the start of 2020, we had around $3 trillion in circulation, but now we have over 20 trillion. So there is enough dollars out there, and the Fed doesn't really need to print a whole lot more in 2022. They need to just restrict a lot of the demand right now so people can't go out and spend. Now, since we're starting to see employment go up in the United States and the number of job postings also starting to stabilize throughout the country, well, that signals to the Federal Reserve that they need to start restricting demand a whole lot more. They have to bring demand down, or else there's just going to be a lot more spending that goes on. All of that spending just means that inflation is going to go up, and there is a lot of factors that are outside of the Federal Reserve's control right now that are causing inflation to rise. If people have a whole lot of money and they're going and buying all of these different products and the shelves are eventually emptying, well, businesses for a lot of things don't really have a choice to fill those shelves back up. A lot of their supply is coming from overseas, and it's being crunched because of the war between Russia and Ukraine and China lockdowns. So even though they want to hire more people in the US, well, that isn't really going to help all of the issues overseas. More people are going to be employed, more people are buying things, but not enough is getting made. That means we're probably going to see a way more aggressive Federal Reserve in the future in 2022 and beyond. Federal Reserve Governor Christopher Waller believes that you need to do a lot of these big rate hikes now when the economy can handle it, when people are employed, because we are at an all-time high, so everything has to be brought down. That is all a part of the big reset and the great reset that a lot of people have been talking about recently. I made a video on this just the other day, and if you want to watch it, I'll leave a link in the description below. But the bottom line here is that everything in our economy, from the stock market to commodities to the housing market, all needs to reset. And we've started to see that as the housing market has cooled off and the stock market has lost all of its gains over the last 2 years, and cryptocurrency is down 50% or more right now. So everything is resetting because everything needs to get back on track to what is the new normal. At the end of the day, the Federal Reserve controls a lot of that reality. They control a lot of that demand. They can decide if they want to have an inflationary economy or a deflationary economy. It really just depends on how much money they're printing, where that money is going, and what their interest rates are set at. But they don't really have a lot of control over the policies that are set in the United States. That all comes down to Congress. Like, for instance, we have rising gas prices in the US, but it's really been difficult for gas companies to drill all throughout the country. Those are policies set by Congress and by the United States federal government. Easing a lot of those and easing some of those, or maybe just making changes in general, could mean that gas prices could come down in the future of the United States. Now, that is not a great example because in the future, we want to move towards sustainable, renewable energy, not not fossil fuels and gasoline anymore. Sure, we're always going to need gas, but we don't want to continue to use it at the rate we are right now. So maybe they don't want to do that, but there's other things that Congress could be doing to help alleviate some of our supply chain issues and get the United States back on track. The fact of the matter is the Federal Reserve does not have control over all of that. They only have control over the demand side and the monetary policy side. And chances are we're probably going to continue to see employment remain strong in the United States for the next few months. The Federal Reserve is going to have to eliminate a lot more demand out of our economy for businesses to start dropping a lot of those listings and firing a lot of people en masse. But this is something that could potentially happen if the Federal Reserve gets way too aggressive with their policies. Right now, the federal funds rate in the US sits at around 1.5 to 1.75%. They might reach around 3% or more by the end of 2022. That would be higher than we've seen in the past 2 decades. So that could restrict a lot of businesses. It could restrict our economy in general and Americans. But the fact of the matter is the businesses are what we're the most worried about when we talk about a recession, because if businesses don't have any money, if people aren't going out and buying things, then nobody is going to be employed, meaning nobody can buy anything. Unemployment goes up, the job market goes down, and now you are in a natural recession. As the job market stays pretty hot, we're probably going to continue to see inflation rise in the United States. These businesses still need a whole lot of money and people are still going out and buying a lot of things. So inflation is probably going to go up past 9% on the next CPI report for June 2022. Eventually though, that will have to come back down as businesses are overproducing products and Americans can't afford anything, whether they're unemployed or the price of goods and services just gets way out of hand. If that happens, then like I said, Americans aren't going to buy anything. So businesses are going to suffer because of that. But while our economy is in a recession, inflation will have to come back down because there just isn't as much money circulating around and supply can finally meet up to what demand is all throughout the country. So we can pretty much expect unemployment and inflation to steadily continue to rise at about the same rate for the next few months in the United States. Businesses will start to realize though that they have way too many employees and they're gonna have to move things around in order to stay afloat, in order to continue to make a profit and to stay alive in 2022. So that could eventually send our economy into a recession. But it really just depends on what the Federal Reserve does with their interest rate policies, because if interest rates go up enough to stifle demand at the perfect amount, reaching that balance of supply and demand in the United States, well, then you could have a situation where people are still buying, but not fast enough for inflation to rise in the United States. So that all comes from the Federal Reserve and our employment picture. At the end of the day, though, this signals that the entire great reset of our economy, from markets to the jobs market to inflation, hasn't really happened yet. We are still in an inflationary economy after transitioning from deflationary to inflationary. We're probably going to remain there for a long time as the job market stays hot and people continue to make a whole lot more money. But now I want to hear from you on this issue. What do you think about the employment situation in the United States? Do you think that jobs and job listings are going to continue to go up all throughout the country, or do you think eventually unemployment is going to rise in the US? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.